Good day, everybody. Jeffrey Beamer here, Senior Investment Strategist over at ewotrading.com. Welcome to our show this week. This is Earnings Call. We don't just talk about stocks and their earnings. If you know and you've been watching us for a while, you know that we talk about how to make money from stocks around earnings. And how we do this is specifically talking about average moves of a stock through their earnings announcement. What are market makers in the options market thinking about the stocks? We do it all right here on the stocks that we hand select each and every week. We also go over a couple of trades. Rambus, we had a trade last week on Rambus, and we are still in that position. So you'll want to stay till the end when I talk about Rambus. And then I have a new opportunity this week for you. So stay tuned. Let's get it going. All right, we are looking at our sheet for this week. We are still in the heart of earnings season, and we have all sorts of stocks that are declaring this week. In fact, we have over 600 companies declaring earnings this week, so we're very busy, and we have a full week of trading this week. So lots of activity going on, and we will jump right into it. We have on the left-hand side here, we have our breakout candidates, stocks that we the market makers. Okay. Not only the market makers think are going to move, but their history of movement through earnings shows that they're movers. And then on the right hand side of the sheet, we have our quiet stocks. We trade these very differently. With the breakout stocks, we trade things like straddles and strangles. With the quiet stocks, we trade things like iron condors, butterflies, things that are what we call theta friendly and respond positively to implied volatility breakdown. All right, so let's jump into it. Let's start talking about what a quiet stock is. So here I have an example. This is Pfizer, and this is, as you can see, the historical movement of Pfizer is very quiet. It is in the single digits, and in fact, Pfizer has been trading in a trading range of only around $6 for the past year and a half. And around earnings, the stock just doesn't move very much. All right. So this is what we call a quiet stock. And this is the perfect kind of candidate for what we call an iron condor. And so the last earnings announcement, which was last week, you can see that the stock moved less than 3% on that earnings announcement. And this is a good example of what a quiet stock is. So let's get into our sheet for this week. And we have a couple of good names here, including McDonald's, Coca-Cola, Marriott, Generac, Cisco, and others. So let's jump over to the chart and start taking a look at some of these. McDonald's had earnings this morning, and you'll see this big, oh my goodness, a gap up and a big candle. Well, believe it or not, this is a $300 stock. Yeah, McDonald's is. And so as you can see up here, the estimated move was right around 4%, and the stock right now is up 4.84%. So the market makers pretty much got it right. Okay, they're estimating, a single-digit move, probably around 4 or 5%. It came in about 4.38%. So we'll see if the 4.83 survives. But again, we would do anything like an iron condor if you were able to put your break evens of the condor or iron condor about 8-9% out of the money. Then you have a very high probability trade. And you can see that this would definitely be making money, as implied volatility on these options are crushing. They've already crushed this morning on the announcement. So that all that expenses that were instilled in the options, infused into the option prices, is now gone. Okay, that's gone. So that is McDonald's for today, up only 4.83%, and that's right in line with where the market makers are moving. And then tomorrow we have Coca-Cola declaring. Now, Coca-Cola is, again, a quiet mover. This is a big, mature company. Let me just double check and see if that is aftermarket or before market on it. That is before market open on this morning. I usually like to tag that. Okay, so before market opens tomorrow morning, we do have Coca-Cola declaring. And again, a quiet stock. The average move and the estimated move are in line. They're right around 3% for Coca-Cola, so we don't really expect a big move. Now, you might be looking at the chart and going, well, geez, Coca-Cola went from 72.50 to 62.50. That's more than 3%. What we're talking about is through the earnings announcement. Okay, just through that earnings announcement. And that's where we make our money, is either on these quiet stocks or on the breakout stocks. Okay. So don't get confused with a stock that goes, drops $10 in a month or in 3 months with what it does overnight going into earnings. Okay. Next, we have on our quiet list, we have Marriott, and they declare tomorrow, I believe, after market close tomorrow. And the estimated move here, again, another $300 stock, is less than 6%. So again, getting your break evens about 10% out of the money would be a high probability of success trade on Marriott. Even with this gap up previously, that was just the estimated move. That was not anything huge. In fact, that move right back here was 6.3%. Okay, 6.3%. And Marriott has earnings tomorrow morning, along with Coca-Cola. They are both before market open on Tuesday, February 11th, before market open. All right, moving on to another well-known quiet stock, not necessarily known for quiet, but it is a quiet stock, is Cisco. Cisco will declare on Wednesday, February 12th, after market close. As you can see, Cisco, man, one of those tech stocks that's doing really well. Just a series of higher lows. Okay. Anytime you get higher highs and higher lows, man, that is an uptrend. And here we go. But through the earnings announcement, they're only expecting a move of about 4%. Okay. So, a move of just a few dollars through the earnings event, and we'll see what the new forecast is, what their forward outlook is. Any positive notes on a forward outlook, the stock will go higher. Any negative outlook, maybe increased costs from raw materials or payroll or wherever it is, could cause the stock to drop. But we'll see. It's still on our quiet list. Okay, continuing to move forward, we have Kraft Heinz, and here we have a stock that actually is a pretty decent mover. Okay, it moves around 6%. And when you get to this range of 6 to 9%, right in there, this is kind of in the middle where you can make a decision. Do I want to play a straddle or do I want to do a iron condor? And so the deal is if I see here a move of 6%, the price of a straddle or strangle is coming in at 2 or 3% of the stock price. Okay, meaning less than $2. All right, right around $2, under $2. I would definitely do the straddle or strangle on this. Okay, but if you can, if the straddle or strangle is going to be well over 10% of the stock price, well then the iron condor is probably going to be best. And if you set your break evens again around that 10% level, around 10% out of the money, then you're going to be really good on this. That's a little harder to do on a $28 stock, but still, Kraft Heinz is in this nice little, is in quite the downtrend. Okay, and so not really, looking for, we'll see if they can change direction here. On for Kraft Heinz. That's in an industry that is this is an older company, very mature, and it comes down to costs and payroll and all those things, and it's hard to turn that ship in this type of company, in this type of sector. All right, so moving on here, we have a couple of more on our quiet list. This would include Deere. Now, Deere is a $468 stock. So this is a lot easier to do an iron condor on, where maybe you can really spreading out those wings on your iron condor. I keep using that term iron condor. If you're new to trading options, that essentially selling a call spread and then selling a put spread. All right, and doing that together. Okay, so sell a call spread, sell a put spread, and the same expiration. then you create your iron condor. That's an overly simplified explanation of what the strategy is, but that's what it is. You take in a credit, and your goal is to keep the credit. Now, Deere and Company has earnings on Thursday before market open. As you can see here, the move is about 7%. Okay, so 7% on a $468 stock. You're going to see probably a big candle if it moves like that, like it did back here in December. That big candle on Deere there was a move of 8%. Okay, on earnings. This was earnings back in November. That was 8% right there, an 8% move, and then you did have some follow through here, which is nice. But right now, the average move and the estimated move is coming in at 7%. Okay, so last on our quiet list is Duke Energy. All right, declares Thursday before market open. That's February 13th. The estimated move here is about 3%. This is very doable for our strategy. Our quiet strategies like a condor or iron condor on a $100 stock, much easier to manipulate the strikes and get that sweet spot spreading out maybe 6 to 9% away from the money. When your estimated move is about 3%, then you should be golden. Now, sometimes when option pricing is very efficient and the market makers are pricing in for the move and they're very good at this, sometimes the opportunity is not there. What we're looking for is a little bit of an edge. So if I can get my break evens about 6 to 8% out of the money, I'm all over this for an iron condor. Okay, but if I can't, then and the premium's not there, then then it's just not a trade, and we move on to the next opportunity. All right. So that's our quiet list this week. And as we transition over to our breakout list, I want to let you guys know about a special webinar that we have going on that starts next Monday. So Monday, February 17th, with my colleague Rob and JP. They are doing a Profit Dynamics Masterclass. You don't want to miss this. They're very good together. And there are two sessions, two 90-minute sessions, one on Monday, February 17th, and the other is the following Tuesday, a week later. You can get more information here at this link, home.hub.com/profit-dynamics. And we'll keep that link and post it below the video for more information. But be sure, free to join. Just be sure you set aside some time on your calendar. You don't want to miss this, and that'll be starting next week. All right, so let's get on to our breakout stocks. Now, what is a breakout stock? Well, here I have an example for you, and that's Shopify. Shopify is a consistent mover around earnings, and you can see that these big gaps, okay? So it really moves around earnings and historically has so. We've done very well with this, with our strategies of straddles or strangles. And going into this week, well, guess what? Shopify's on our list for this week. But let's take a look. We have this morning, we had Monday.com declare, and then tomorrow we do have Shopify. So we'll get to update that chart. We have Upstart and Super Microcomputer, AppLovin, Dutch Brothers, Crocs, and others. Let's go ahead and jump to the charts and take a look at some of these. I want to start with Monday.com. It's off its highs. This thing had a big move today. It was trading higher by over 30%. First thing this morning, you can see the wick on that candle now, but the average move on this is only 18%. So this was a great trade, getting that pricing in. Pricing on the options came in right around an 18% move, and yet the stock so already today, even right now, we could have closed out that straddle or strangle at a profit, up almost 28% here as we approach midday on a Monday. So this is typical of a big mover, and you can see the gap back here in November, this big gap down. So Monday.com often appears on our list, and it definitely did not disappoint. All right, so also on the list, we have MedSpace Holdings. All right, the average move here is greater than 13%. And you can see the stock gets kind of pretty volatile, and then it gets pretty quiet, then pretty volatile and pretty quiet. All right, and now it's pretty quiet, and I like that right ahead of earnings. and the average move and estimated move right now is greater than 13%. This is a $300 stock. Okay, so here's the thing about a stock this expensive is that the straddle or strangle is going to be expensive. All right, it could be, it could be $4,000 or $5,000 just for that straddle or strangle. But the thing is, if it moves, well, and it moves its estimated move, you could be making 50%, 80%, even 100% on your money, um, just through the earnings announcement. Okay, that is not unusual for these types of trades around earnings and around stocks that make regular moves like this through their earnings announcements. So they declare today after market close, and the expected move is around 13%. Okay, another stock that is on our list is Upstart Holdings. Now, this one is a little bit more reasonable. It's a $70 stock. All right. The estimated move here, the average move, look at this, it's greater than 30%. Greater than 30%. So this stock is a big mover. In fact, that last candle back here, right here, that's a 46% move right there. 46% move through the earnings event back in November. And right now they're pricing in about a 30% move. So we could see a big thing. Now the stock has started to move a little bit, but after market close tomorrow, we will see what the final numbers are for Upstart, and expecting quite a bit of volatility from there for that particular stock. All right, let's jump over then to Shopify. And again, we show this trade almost every week. They will declare tomorrow, Tuesday, February 11th, before market open. So first thing in the morning, the average move there is greater than 17%. I've seen moves here well over 20% on Shopify, and it's a $120 stock. You can definitely get the pricing. Priced it out this morning. It was about $1,400. Okay, so that's a little over 10%. For the straddle or strangle, and I don't like doing that, but when I have a consistent mover that moves 17% to 20%, even more, then I'm okay doing that. All right, and Shopify is right there, so we'll be sure and see what Shopify does tomorrow morning. All right, Super Microcomputer, it will declare tomorrow afternoon after market close. Now here's the thing. Look at this move here. This was a $26 stock a week ago, and now it's trading at $41.49. All right, this thing is a has increased by 50% in a very short period of time. What makes me nervous about this. This is a stock I do like to trade through the earnings event. Okay. This is let's see here. That last move. Okay. This drop right here, the last earnings announcement was 30%, 38%, I believe. Right. Just that one move, right? Just that one candle right there. Okay. And then look at the follow through it had. So, it can move. What I like to see is the consolidation right before the move. So up until really last Monday, a week ago, getting into this trade would have been, well, preferred. But if you didn't, boy, look at that move, 50% move. I can't wait for earnings tomorrow, because maybe the news is already starting to get out. The stock might not move its estimated move because it's already moved 50%. And the estimated move is another 18, but we've seen crazier things. If the news is really good for Super Micro, we can see this thing trading upwards of 60, 65, $70 after, by Wednesday. I don't know that for sure. It could drop to 20. It could drop to 15. That's why we trade these straddles and strangles through earnings. Okay. And so that is Super Microcomputer. And then I had to include this stock, AppLovin. Just giggle every time I hear this stock name. APP is the symbol here. And believe it or not, this is almost a $400 stock. Okay. AppLovin is consistently a big mover, moving over 20% through earnings. Okay. The last move that you see here on your chart, that big gap. This is a 46% move right here, okay, followed by a 17% move on this candle right here. All right, that is what you can expect. And then this little chop, this tight consolidation upward, we call this melting higher. All right, this melting higher, we could see the stock maybe gap up to 450 or even more tomorrow. Okay, so 20% of that's going to be over $60. So we could see this trading at 460 even. If it makes that move higher, and if it makes that move lower, well, we're talking about $60, $60 lower. So you're looking closer to 310, 320 on the move. So it might want to fill that gap. Who knows? But that is AppLovin. If you're not familiar with that company, maybe you keep it on your list now because it's fun to watch. Okay. It did consolidate didn't really do anything right around 320, 325, started melting higher. Love this activity going into the earnings announcement. All right. So just a couple more stocks here. We're going to talk about Dutch Brothers here. And they declare Wednesday, and who knew, something like Dutch Brothers that is a little bit of just a little coffee company, okay, that they will have a move around 20%, okay. It's pretty interesting, okay, almost like what Starbucks used to do, but somebody put a bid into Dutch Brothers, and this stock took off on its last earnings announcement. That gap higher that you see, this is 28% on the close. You see that big wick there. Okay. You see this big wick right here. So it was up even more, but the close was about 28%. And now we just have, again, this just nice little move higher. And now we have this angle of ascent increasing. Okay. As we talk about, when the angle of ascent increases, it can't sustain that. That's one of these candidates here. So we should expect some volatility from Dutch Brothers tomorrow, or on Wednesday, the 12th, after market close. And again, a greater than 20% move. So you're talking, right around $15 for this move. So the stock could be at 52. The stock could be at 80. It could be right around there, either direction if it moves its estimated move. All right. So we will look forward to earnings there. And we do these strategies through our Delta Neutral Breakout publication. Okay, the other trades, the quiet ones, we do through our Delta Neutral Income portfolio. And people subscribe to that. And they also subscribe to the breakout for these big movers, these big overnight movers. And in fact, our last breakout mover is on Crocs. All right, now Crocs, man, it is really selling off here. As you can see after their last earnings announcement, all right, this big drop that they had through earnings, and then a little bit of rally consolidation. And then recently here, stock has caught a little bit of a sell-off, right? And you can see it's down over 3% today, but we're expecting a move on Thursday before market open. Thursday, a move of greater than 12%. All right. So Crocs could be definitely, depending on the outlook, maybe no new products, those sort of things. Stock could really, really drop around the earnings event. So we'll keep our eye on that. And don't be surprised for you Delta Neutral Breakout subscribers if you don't see many of these in our publication. Okay, the only reason you wouldn't see some of these in our publication is because the pricing's not there. If it's right in line, if the option market makers are right in line with that average move and the estimated move, there's really no edge to the trade. And so I try to make sure we have an edge in every single trade. All right, so let's take a look at our run sheet one more time here. We have our breakouts now. Any subscriber to our publications gets a copy of this each and every week. I generate this for our subscribers, and they get this first. Okay, I produce this. I usually send it out on Sundays before the market opens on Monday, and you get an idea, a clear idea of stocks that are potential movers and stocks that we think are going to be pretty quiet. All right. And so that is our list. Now, we talked about all these stocks. So be sure to not only like and subscribe if you like the information that you're getting about these estimated moves and what we expect from the stock. Okay. Like and subscribe us. If you do that, it helps us out, get out to more traders like you that may find this interesting content. But for those of you that do watch us, be sure to look at the chapter feature at the bottom of this video so you can jump to, for example, if you want to go back and see how Shopify moved, you can go back and see where the price was at the time that we were talking about it, and then look at the chart right now and see where it's trading and see how that lines up with the estimated moves that we talk about each and every week. All right, so with that, let's get to our trades. Everybody loves getting to the trades. What did we do last week? We did Rambus. All right, RMBS. We did a strangle on Rambus, and this particular strangle was just a little over $500. So even the smaller accounts, say around $10,000, this would be very appropriate for, because I try to limit the entry levels to about 5% of portfolio. All right. So what this means is a $10,000 account is 5% of that is $500. So this would be very appropriate for that. And then a stock like Shopify, where it had a $1,400 debit, that would be valid for accounts that are greater than $30,000. Okay. So it's really dependent on your portfolio size and how you want to trade some of these. But Rambus, let's take a look at how it did. Now, the thing about Rambus is they don't have weekly options. So what we do is use the standard options. Okay, so February 21st is the expiration for these options. And you can see here, well, it's a little hidden by my red circle, but the stock gapped up, moved up a little bit, and then had follow through the next day. And then all of a sudden is trading sideways. All right. I mean, just absolutely if you look closely there's just 3 days where the stock has just gone nowhere. Now, the stock has rallied off the lows that you see here. In fact, I'm looking at the stock on another screen right here. It's up at $67. When I snagged this image, it was at $66. So our profit here is not going to be a negative $67. It'll be probably about a negative $20. What this means is, and you can see the light blue lines in that image are the break evens, one on top, one on bottom, those horizontal light blue lines. So we are right up there against that break even. Well, since we have 2 more weeks in the trade, all right, we're going to stick with this. All right. And I will update you in the upcoming week or 2, depending on when we get out. If we get out later this week, I'll update you next Monday. If we don't get out until the following week, I'll update you the following Monday. All right. But if you were, like, for example, trading this in your own account, you definitely want to use your own money management and your best to your best ability and your best tolerances. All right. So that was Rambus. We're still in the trade and still waiting for a little bit of a profit. Right now, it's not taking that big win right after earnings. It's more about managing your risk, and we're right at break even. So we're pretty close to taking this off. Okay. So let's get to our trade of the day, or trade of the week, I should say. And that we are looking at as it comes up here. Are you ready? It is Dutch Brothers. All right. Now, Dutch Brothers is in this little bit of a rally mode. Now, this is a more expensive trade. It is going to be one of those that's appropriate for accounts greater than $30,000, because the debit on this thing is right around $1,500 for this straddle. Now, I know this is a straddle because of the point, where the black lines meet on the risk graph, which is on the right-hand side. That indicates that it's a straddle. If it was a flat base there, that would be a strangle. All right, so this is a straddle, and we are looking for the stock to either break up or break down and through earnings, and it is about $1,400 to $1,500 on that debit. All right, so that is the trade of the week this week. Everybody, I hope you enjoyed the show. Now, I will say, I believe next Monday is a market holiday. I believe that's President's Day, and the market will be closed on Monday. So we'll probably come to you on Tuesday for another week, because like I said earlier, we're in the heart of earnings season right now. Lots going on, lots of opportunity. So join us each and every week right here for our earnings call, and we'll go over the stocks all again that have upcoming earnings and what their estimated moves are. And that's how you make money on these stocks, through earnings. Everybody have a great trading week, and I will talk to you again soon. Take care.